welcome to the EisnerAmper Engaging Alternatives podcast series. I'm your host, Elana Margulies-Snyderman, and with me today is Paul Podolsky, founder and CIO of Kate Capital, a billion-dollar discretionary global macro manager. Paul, who previously spent over 15 years as an executive at Bridgewater Associates, will share his outlook for his investment strategy, including the greatest opportunities, challenges, and more. Before we dive into the conversation with Paul, don't forget to hit that like button and subscribe to EisnerAmper wherever you listen to your podcasts. And you can also find us on YouTube at EisnerAmper. Hi, Paul. Thank you so much for being with me today.
Thank you for having me.
Absolutely, Paul. So to kick off the conversation, tell us a little about yourself, your firm, and how you got to where you are today.
So Kate, as you said, is discretionary global macro. That means that we try to build the best portfolio we can out of being either long or short, stocks, bonds, currencies, and commodities. And I've been interested in this type of investing for a long time. I started off my career in the 1990s as a foreign correspondent in Russia. That got me very interested in how prices are formed and the importance of them in understanding what's going on around us. I went on to pursue a graduate degree in economics, worked on a trading floor for 6 years, and then worked at Bridgewater for the time you described. And along that way, it was just a deeper and deeper investigation of how prices form.
At EisnerAmper, we are creative problem solvers that take a 360-degree approach focusing on you. We're an award-winning firm with decades of experience. EisnerAmper, let's get you ready.
Great, Paul. That segues into the follow-up question I have for you. Like I mentioned at the top of our conversation, Kate focuses on discretionary global macro investing. I would love to hear your high-level outlook for the space.
I think that we're in a period of time that you need to be very aware of how rapidly the foundations of what you believe are reliable and can shift. This is something that I've written a bunch of books, and one of them is called The Uncomfortable Truth About Money. And the concept there is that while we'd all love money to be stable and reliable and help us grow, the reality is that it's ever changing and ever fluctuating. And now is particularly one of those periods of time. So we have a major technology shock that is changing the nature of labor, changing the nature of what companies are going to be safe and which ones are going to be risky. Some are going to be winners, some are going to be losers. It's also changing the nature of inflation because the cost of what it takes a human being to do something is different. And then thirdly, it's changing geopolitics because the people who control this technology will control global power. And so all those forces are interacting at once right now. And the key thing for an investor is how you build a portfolio that can profit from that type of environment. And it isn't easy. The types of companies that were successful 50 years ago, most people have never even heard of them now. And the same thing goes for currencies and what bonds are safe, et cetera, et cetera.
Paul, more specifically in your sphere, what are some of the greatest opportunities you see right now and looking ahead, and why?
Right. So the one thing I should say is that, of course, this is not investment advice. Investing is risky. As I write on a blog, I put out a letter from Paul. I say, investing is risky and often painful. Do your own research. So there's more formal legal disclosures, but that's the essence of it. So I actually think that now is the time for a portfolio as opposed to a single trade. A lot of people are saying like, oh, what's the trade that's going to, what stock do I buy that's going to make me money? I don't believe in any of that. I think that the way to navigate through this is being able to have a portfolio that has different pieces to it. So I think that owning equities right now can be attractive because of this new technology if you can hedge the risk that that government bond markets begin to fall apart. So the equities will do okay as long as long-term interest rates don't spike higher. And the reason why long-term interest rates can spike higher, for instance, in the United States, is you have a budget deficit that's 6%. It's likely to grow to 7 or 8%. There's very formidable legal challenges to the tariff policies that the White House has put in place. And if those tariffs are deemed to be illegal, that'll actually make that budget deficit that much worse. So I like putting things in combination. I think the equities are attractive if you can combine them with a position that is short certain fixed income markets that are going to be negatively impacted from this, and then combine that with being long certain fixed income markets that actually have a very different dynamic.
Paul, on the other hand, what are some of the greatest challenges you face in your space and why?
I think that the key challenge that what has to adapt to very quickly is that the nature of information. What are you doing in a seat like mine? You're trying to distill many, many different data points and arrive at a simple thesis of what the best portfolio is to hold. And what you know now is that the amount of information that you need to distill is rising and rising and rising. In all countries, all over the world, the amount of, we all carry these phones with us. These phones are sensors. These sensors are giving us all sorts of information about, are you on the subway? How much are you traveling? Where are you shopping? That's just one example of the amount of information that we have to digest is mushrooming. And at the same by the same token, the ability to synthesize this information is getting better and better too through AI. So I think the key question is to build a portfolio. At the end of the day, the portfolio is required. Always backward looking are very simple. If you bought and sold these 5 things, if you knew with perfect foresight you could make 20% a year after year. The reality is when you're making decisions in the present, it's always very complicated. And there's lots of trade-offs that you're trying to make. And so the amount of information you have to synthesize has grown, and the tools you have to do that well have gotten much more sophisticated. So the challenge is how you integrate them.
Paul, we've covered a lot of ground today and wanted to see if there are any final thoughts you would like to share with us.
I think that investing has a very practical function. We have excess savings. We want it to grow over time and avoid inflation eating into it. But that's the primary purpose. But investing is also a lens into understanding the world and what's going on around you. And it's an objective lens. In other words, the price is the price. And learning how to understand those prices is sort of key to understanding reality.
Paul, I wanted to thank you so much for sharing your perspective with our listeners today.
Sure, my pleasure.
And thank you for listening to the EisnerAmper podcast series. Visit EisnerAmper.com for more information on this and a host of other topics. And join us for our next EisnerAmper podcast when we get down to business.